But when it comes to Unichain and what Uniswap means, right? Uniswap is not just a single smart contract protocol. It's like a world of things that interact with it and are built on top of it. And so when it comes to like a Unichain, it's a kind of a chain for a specific community and set of use cases. And I think that it will people will self-select into that, and we'll figure out what that means over the years.
Hey everyone, this episode is brought to you by Fuel Labs, who's launching Fuel Ignition, a new high-performance Ethereum L2 powered by the FuelVM. Now you're going to be hearing all about Ignition later in the program, but for now, what you need to know is they are launching phase 2 of their points program. So click the link at the bottom of the show notes and head over, start experimenting, messing around on Fuel today. Thank me later. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. Today I'm joined by Hayden Adams and Hasu. Guys, welcome to the show.
Great to be here.
Same.
Yeah, man, this is going to be fun. We're going to be talking about Unichain and Rollup Boost, so sort of joint announcement that came out of Uniswap Labs and Flashbots. But before we get there, I would actually like to start by zooming out to kind of get the 10,000 foot view. And I think just try to kind of get your guys' view on the state of the union around Ethereum today and the Rollup Centric roadmap, which is everyone's favorite conversation. And I think once we get your guys' sort of perspective on that, that's going to inform more of the technical discussion about what does Unichain look like, what does Rollup Boost look like, and what were the different decisions that went into the technical architecture there. So maybe Hayden, can I kick it over to you? Give us your 10,000 foot view on sort of state of the union around Ethereum and Rollup Centric roadmap.
Yeah, I actually am pretty excited about the Rollup Centric roadmap. I think it's pretty cool. Came out of this. I believe Vitalik coined the term a few years ago, and really, what to me the Rollup Centric roadmap means is that Ethereum is trying to scale horizontally. And that there's basically two types of scaling: vertical scaling, horizontal scaling. And vertical scaling is basically like, let's get beefier and beefier machines, beefier and beefier nodes, and just try to run everything on one, essentially, and blockchains are kind of like servers, so run everything on one server. They're like servers, but with these nice decentralization properties. And then the Rollup Centric roadmap and horizontal scaling as well, at some point, the hardware capacity of what you can run on one device caps out, and it caps out pretty soon, actually, right? And then so to scale beyond that, you need to have multiple, pieces of hardware, and there's sort of this limit of scaling horizontally is almost unlimited. It's really just like how well can you coordinate across many different machines essentially, and that's why people talk about things like bandwidth and all of that. It comes down to like the limits of scaling horizontally, but it's far greater scale. And when I think about like where blockchains are going to be, and I see blockchains as basically the things that are most applications are going to run on in the future, because they add these really nice properties like provability, transparency, auditability, and and decentralization and stuff like that. And to scale to the needs of the world, you really need like a huge amount. You need vertical scaling, but that you need a huge amount of horizontal scaling as well. And so Rollup Centric roadmap is saying like, yeah, there's a lot of problems. Yeah, like let's do that. And then what Ethereum is now grappling with is how do we do that in a way that creates a really good user experience that really just works. When you think about the internet, right, it has scaled horizontally. There's a million servers everywhere. They're all connected to each other, and you can use applications, and they all seamlessly flow between them. And it does that using standard information sharing protocols, SMTP and HTTPS, and all of this stuff. And what Ethereum needs to get right is its abstraction layers, its standards for how we connect different blockchains to each other while preserving the things that we care about within Ethereum. And so that's what the Rollup Centric roadmap is to me, and I believe in it. I think it's the right path for Ethereum. And when I think about Unichain and what we're doing, it's trying to make sure that we get the abstraction layers right, and that we build a really solid technical foundation and the right technical standards.
Also, what do you think?
Yeah, so I would agree with all of what you just said, Hayden. I think the goal that Ethereum is driving towards is not anywhere close. like the goal is actually pretty far away. The goal is something like, we want a horizontally scalable system with great user experience, and it must be global and decentralized. And, no blockchain ecosystem is anywhere close to this, right? So it's a lot of the future value lies in what the roadmap is. And I think Ethereum's roadmap is very thoughtful and honestly like thinking the furthest ahead on many of these important challenges. And I think, people often confuse like short-term wins in one ecosystem with like, when you kind of zoom out, did you make a meaningful step towards this like overarching goal? You didn't really, right? Because you can make a blockchain that's very fast, and like jacks up the node requirements, but did you get closer to solving, for example, the horizontal scalability system or the like global and decentralized challenge? No, you didn't really, right? And so, for example, when people say, the rollup centric roadmap was a mistake or rollups are parasitic, like, yeah, rollups today are probably as a concept underutilized. Like a lot of rollups look the same, they just kind of, copy the main Ethereum layer one client and like, jack a centralized sequencer like on top of it, right? And then they call that innovation. I think, of course, we have a long way to go, but we have some rollups that are genuinely innovating, and I think like both in terms of what's already here, but also like up and coming ones like Unichain that are pioneering like very innovative technology and making trade-offs to what's here. And I think we need more of that. So I think the rollups differ from kind of Ethereum's original sharding vision in the sense that they are not all homogeneous, right? And that they are also not, just all kind of spun out of Ethereum, but that they are actually created by a venture-backed ecosystem where you can have this kind of bottom-up innovation. And I think that's a good thing. So we should lean more into that. Of course, like right now, I mean, it was always going to be the pain period. Like if you went back 2 3 years and somebody tells me, okay, we have now the first 20 rollups that have some utilization. Will we have solved interoperability? No, we probably won't. So of course it will look like the ecosystem is drifting towards more fragmentation, but this is kind of almost like the lowest point in that. And we will solve it. Like we will solve fragmentation. And would we rather not have all of these rollups as part of the Ethereum ecosystem that are aligned and that are like bridging to Ethereum and posting data to Ethereum? Like I think we are very glad that we have them. And so we now only got to focus on getting more value out of the rollups that we have, making them more competitive with alternative layer ones, with centralized exchanges, and with traditional server infrastructure. And we got to make them interoperable. And I think then Ethereum is looking actually pretty incredible.
On now being a painful moment, I'll just like I gave a talk actually internally to Uniswap Labs where I was trying to explain the Rollup-centric roadmap and where we're at as an industry and like all these like questions people have about fragmentation. And I basically compared it to teenage penguins, where teenage penguins go through like a really if you just Google teenage penguins, you'll see that like they look extremely awkward. They're like the baby penguins are incredibly cute. The adult penguins.
So do human teenagers, by the way, too.
Yeah, I actually that's where my talk started, and then my talk looked and felt too weird, just showing like awkward human teenagers. So I pivoted to penguins, but penguins look extra weird as teenagers, and that's sort of like the phase. We're in this like teenage molting penguin phase of blockchains. So
it's also there's a quote, Hasu, I can't remember. It's some podcast in the past you've said this. There's this feature you could view it as a feature or bug of crypto that it's so relentlessly pro-cyclical. And one of the challenges of that is that there can be long periods of time where it looks like a competitor that has made actually a bad decision. It looks like they're winning or that it's a good decision. But then you have this cleansing fire, so to speak, and after a period of time, and the wheat gets separated from the chaff. And I think if you've been operating in crypto for a number of years, you've probably experienced this yourself, where it looks like, hey, I'm making a very thoughtful decision here, and my competitors don't seem like they're making thoughtful decisions, but it looks like they're winning. And you just have to have the conviction to stick it out for a period of time and ultimately, hopefully, be proven right. And I'm sure, Hayden, you're smiling. I'm sure you've experienced that at Uniswap a number of times.
I just remember like 5 years ago, when Sushi launched, and I was like, oh, that's not sustainable. It's going to run out of tokens in 4 years. And then 4 years from that day, they ran out of tokens. And again, I'm not taking shots at competitors. I actually think that like all the forks and competition out of DeFi Summer really pushed the industry forward and pushed us to do better. So I think it was like a good thing for crypto and the world that all that stuff happened. But I just remember it's like sometimes it takes 4 years to be right, and crypto Twitter like can't think past 1 to 2 weeks, and so it's a very interesting public forum for us to all be communicating in.
Yeah, I mean, you see it in so many things, right? I mean, you've seen like companies, right now, kind of announcing like large layoffs, etc. And it's kind of this like if you don't manage your risk, like you'll have the market manage it for you. And I think in a lot of ways, like the companies, like the projects, who are kind of were more lucky or like did a better job managing, for example, like their roadmaps, their treasuries, etc., didn't overinvest in some hype, for example, that then didn't materialize. And then at times like this, of course, now they stand to benefit, right? By, for example, scooping up talent that's let go in other places.
Yeah, we've hired 45 people since April.
Yeah,
Hey,
nice.
Yeah, that literally is what it's. A lot of this is just talent being acquired at kind of ridiculous prices, and then it floods the market at some time, and you got to be in a position to pick up the pieces when that happens. So, all right. So I've got more questions for you actually on the Rollup Centric roadmap, but I want to make sure that we got enough time to flesh out what the two of you just launched in tandem. And yeah, this is where maybe I want to get into what exactly some of the aspects of the vision for Unichain as well as Rollup Boost, because I think they're both super interesting in their own right, but especially interesting when paired together. So maybe Hayden, can I kick it over to you again to can you give us just an overview of what did we just launch here? And then I want to hear from the two of you. I'm very interested in how you guys divided responsibility in between the Flashbots team and the Uniswap Labs team when you were developing this.
Yeah, cool. Happy to get started. And I'd say that we were actually very excited to get into chain level development, and we first started this in with our work on EIP. I don't remember the EIP number, but the transient storage one. And for us, we think that building full stack really gives you a more complete picture to the industry, and so that's one of the reasons we like to span all the way from user facing products to chain level development. Is that it lets us, I think what happens in crypto a lot is that people push their problems into other parts of the stack. All right, they're like, I'm a modular piece in this sliver of the stack, and all of my problems are going to go up here or down here. And if you live up there or down there, then screw you. And I think that one thing that is exciting to me about just making a foray into chain development is that we actually can't push our problems anywhere in the stack because we have infrastructure at every layer of the stack. And so we can't offload our problems. We have to solve them with what we think are the best abstraction layers. So there's this meta reason that we're very excited about getting into chain level development, which is that we think we can bring something to the table. And when we look at Ethereum's Rollup Centric roadmap, we think we can be a part of that and we can advance it. And within that context, we're the way our approach here and what we're trying to do is build a chain that takes all of our learnings and tries to meet the needs of a specific community, and that's really the Uniswap community and DeFi more broadly. And so we're one thing that's interesting is people talk about app chains and try to compare and contrast. Is this an app? There's been this I've seen a lot of debates about whether or not Unichain is an app chain, and it's kind of, in some ways it's complicated. You can think of it as an app chain. You can think of it as not an app chain. When you actually think about what is the best design for an app chain or for a Uniswap specific app chain, funny enough, you still need general purpose use cases, right? Because Uniswap is not this single protocol. It's actually a protocol with many things being built up and on and around it. And Uniswap v4 is coming out, right? And it has these hooks, and anyone can build a hook. How do you create expressivity for general purpose hooks while not having open, permissionless smart contracts? And so, Unichain is a chain for DeFi, and that takes all our learnings from what Uniswap needs to be most successful on an L2, right? And that's why we're focused on things like significantly lowering the block times using this TE builder with Flashbots, as well as enhancing the decentralization with this Unichain validation network. And so I'd say that I think what Unichain ultimately becomes is actually not truly up to us. It's it's up to the people that use it and deploy things to it. But I think that one thing that I think is really under talked about in in blockchain scaling, we have this really funny thing that's happening, which is basically, so if there's a bunch of competing L2s and they all are trying to be like the general purpose L2. But when it comes to like horizontal scaling and what that actually means, and each of them has a Uniswap deployment, and Uniswap or a Uniswap fork is usually the top app on every single chain in terms of usage. And that's not an accident. And it's not even just like due to Uniswap's brand or whatever like that. It's actually partially because AMMs eat block space like no other, right? They create constant arbitrage opportunities that just like eat all, like the floor gas price is going to be the lowest value arbitrage in any Uniswap pool on that chain, because otherwise, you'll do the arbitrage. And so to actually scale horizontally, we actually need to have more focused chains. And when it comes to an application developer, right? Like an application wants low fees. So while we have these like L2s that are competing to be, these DeFi hubs or whatever it is, the applications that need to build on them actually need lower costs, and co-locating on the same block space as an AMM will actually raise your costs. So what we're going to start seeing is apps that don't want to be in the same block space pricing as an AMM, that actually need to trade across chain. When someone wants to make a swap, or if you need to swap from an application, it might bridge and swap and bridge back. And so I think that part of the Unichain vision is to create a non-fragmented source of liquidity, and that can interoperate really quickly and cheaply against other layer twos, so that it can sort of the same role that Uniswap. Right now, you have Uniswap on mainnet, and other smart contracts trade through it, and you're going to have Unichain as this chain, and then you're going to have other chains that trade through it. And so there's a bunch of components that go into that, but that's really like part of the vision here. And it's actually necessary, and it kind of gets at like the funny incentives across like the people building the chains and the people building on top of them. Again, it's like people want low cost, people want to make more fees, which is higher. Like the people developing the chains want higher fees, and the people building the applications want lower fees. And so, a non-fragmented kind of cross-chain interrupting, Unichain can really help that.
Yeah, I think in terms, for me, the motivation for building Unichain, or like for us collaborating on this, is actually, I think it's actually threefold. So on the one hand, I mean, it's good that we started with the Rollup centric roadmap, because of course this is just an incredibly important, I think, and pivotal topic right now for Ethereum. And I strongly believe in the Rollup centric roadmap. And but at the same time, like rollups are not maybe like living to their full potential. And so this is something that we want to change with Rollup Boost. Like we want to make a small contribution towards rollups eating all of the innovation from other chains, making like it very easy for them to innovate and adopt new features, and become more decentralized as well, and overall like become more competitive. But in particular, like for years I've been like, every month I look at this, DEX versus SEX volume chart. And I've just been for a very long time, been very interested in decentralized exchanges. And like, I've written like a fair bit about the like microstructure of exchanges and like how that maps to blockchains. And this is actually what got me into MEV on Ethereum in the first place, because when you like think about DEXs, there's no way that you don't stumble over MEV at some point and realize it's this like incredibly important topic. And the way that a DEX outsources certain tasks, for example, ordering, like Uniswap for like a very long time, like has been outsourcing, the matching, of like bits and asks to Ethereum, right? In a sense, right? This is kind of the beauty of like, it's so easy to build an exchange on Ethereum, because like you can be really focused on like a small part of the stack and like use the blockchain for other parts of it, right? But of course, like it creates these problems. And I think if we want to, get away from Coinbase, get away from Binance as these like very central hubs for crypto trading, then there are specific things that we can do to make decentralized exchanges more competitive. And I think that, lower block times is an important one, but manage it in a way that is actually MEV aware. I think privacy is another huge one. And then I think like expressiveness and overall like better programmability of your transactions would be a third one. And I think that Unichain is pushing like both rollups and decentralized exchanges a lot into that direction. Where I think if this gains meaningful traction, then it'll end up being a much more competitive experience compared to centralized exchanges than you can get anywhere else today.
Yeah, and even when you think about things like the 250 millisecond block time and where that comes from, it's like when someone makes humans perceive when you're like clicking on a website, you only really notice up to like 150 to 200 milliseconds, and so we're kind of pushing towards the boundary of human perception, which is really the goal, right? People want things to feel instant. They don't want to wait 12 seconds. I think the MEV. I'm glad you mentioned MEV. MEV is really important. Imagine a world where like someone builds like a online poker. I'll use poker because Hasu likes poker, but someone builds like an online poker thing and Amazon like inserts their own like employees into the game and use their privileged ability to like see what's happening at the server level to like arbitrarily like favor their poker player over like MEV extraction is not a great like we really do like users are ultimately going to choose chains that don't siphon their MEV to other people. That's like pretty obvious to me. And so a lot of like especially for like high MEV generating use cases like Uniswap. And so I think that what we're able to do with this builder and we have this whole priority ordering version of trade execution that we're doing on top of Unichain that should really help have most MEV basically go right back to the users. And there's a bunch of theories. Phil at Flashbots has a whole theory about how extracting the MEV and then returning it is actually a more efficient market than just not extracting in the first place. Basically, that there's market efficiency to extracting it, but then you have to return it. I don't have an incredibly strong opinion about the relative differences there, but I think that like the high level zoomed out thing is that like users don't want their MEV siphoned, and users are going to choose things that where most MEV is returned to them.
At the risk of going down a rabbit hole here, because I have so many questions for you, I would love Hasu for you to respond to that, because I find that such an interesting debate, actually. Should we be maximally extractive and then decide what to do with it and then return it, or should we try to prevent it from ever happening? I would love to get your response, and then I'll go back to my list of questions.
Yeah, I think for me, the difference is, what mechanism can you design that can be credibly decentralized? Because you can, like, in a decentralized setting, you can design systems where like a user from their side programs their transactions, for example, to be only usable in a certain way. And then even if many like very kind of strongly rational actors like block builders and searchers who are willing to push like any edge that they can get have no way to use that transaction in a way that's not intended, for example, right? But let's say you implement a different like a different method where you just say, and like we are just banning MEV at the protocol layer, for example, whatever that may mean, right? Like, for example, we are like kindly asking validators to please like run this honest ordering mechanism, right? Then you just end up creating a system where the parties who don't follow the rules end up making more money than those that do. And that's a problem, right? Because you like over time you'll end up centralizing your validator set and your builder and sequencer set like to the parties to end up extracting the MEV, and you push out like all of the quote unquote honest parties, right? And so I think what Phil is saying most of all is that you can only basically like we all want MEV to be returned to users and applications, basically to the source who creates it. But those parties need to take like control of their own ordering, basically, and of their own data. Like you can't prevent MEV at the chain level itself. Not if you have like the strong constraint that, for example, Ethereum layer 1 has for decentralization. And this is an area where this constraint is a bit looser for layer 2s, because they basically rely on the layer 1 for safety of their state transition. And that is actually a pretty big deal, because then you can have MEV mechanisms on layer 2 that can be incentive compatible there that could probably not be like, or that not probably, that could definitely not be incentive compatible on layer one. And so this is another area where I think, we can innovate on rollups, but it's not like one-to-one transferable to the layer one.
Yeah, and that is where you get into maybe, I think Dan Robinson had a great write-up on this about priority ordering is all you need, and this concept of MEV taxes, which could work on an L2 and never on the L1. And that is, to me, when I looked at this team up in between Flashbots and Uniswap, I was like, oh, this makes sense to me, because I spent a whole season with Dan on DEX design, actually. And if I had to do a one-sentence summary of that entire season, it would be reducing leakage from the system. And so that's, how do you make sure that MEV goes back to users? And also, how do we make sure that we aren't leaking MEV to the L1 in all of these various ways? And so when I looked at Unichain, I was like, okay, this solves a lot of those issues. So
and we have an implementation of the priority is all you need thing on top of our Unichain testnet, which is, and like the I could quickly explain what that is.
Yeah, that'd be great.
Yeah, so priority, and I think that like I think that like, if again to like priority is all you need is like kind of Dan is good at coming with like good memes. I think that like one way to frame it would be like priority is pretty good right now, versus like all you need forever.
It doesn't
I don't
quite
know
hit the same as the title of.
It doesn't hit as good.
Yeah.
So you gotta say priority, but like or maybe even like very good right now, relative to everything else. But priority, what we're essentially doing is, we have this builder that is this collaboration with Flashbots, and that's going to basically be enforcing a few things. One, it's going to be doing the faster, sub blocks, the 250 milliseconds. The other thing it's going to be doing is really enforcing a fair priority gas auction on everything that is fed into it. And so, I think the cool thing here is really that, like, if you have a let's say that you do have like strong properties around the priority ordering of transactions within a block, right? You have like a pretty, you have like a pretty strong belief that there was a fair auction there, and then the transactions that were output were ordered for, in whatever paid the highest priority fee. But what you can actually do is you can start to construct intent-based transactions that are aware of the priority fee and aware of this auction, such that the user's the user is represented within it. And what I mean by that is, let's say that you have an order that executes at a fixed price plus some multiple on the priority fee. Now, you can't do this if you don't have, like, you can't do this if there's not a fair priority gas auction happening, because then the priority fee is less meaningful. You can have these like side channels and different ways that the block rate is being built. But if you know that, like, and that's what where the TEE comes, and you get a stronger property around the ordering due to priority, you can actually say, like, this trade's going to execute at 3,000 USDC per ETH plus 8 priority fees, or 15 priority fees. And you can just like fine tune this priority fee multiple. And what that does is, like, the more MEV you leave on the table, the bigger of a ARB opportunity that creates. People start bidding it up in this priority gas auction. But every unit they bid up, the priority fee actually increases the output amount to the user. So they can only bid it up until the point where that output amount makes they're no longer a profitable arbitrage opportunity. So essentially, let's say that you do like 9 priority or 10 priority fees, then like 90% of the MEV is going to go back to the user. So here, this is an example of like you leave the MEV on the table, but you let people compete in an auction, but it gets bid up to the point where where the arbitrager breaks even, and then or some portion still goes to the arbitrager, but ultimately most of it is returned to the user. And why do this versus like not have MEV? I think one thing that's really interesting is it's hard to know how much MEV will be in a transaction at the time you generate it. And this allows us to like basically parameterize orders in a way that is like a little flexible, because today, if we leave too much MEV on the table, in the current way that trades execute on Ethereum, it just all gets eaten up. There's no user protection. And so we just have this like multiple number we can tune. You can even create like an algorithm or an AI tuning system or control system that basically just, if transactions are taking too long to get included, you lower it. If they're getting included right away, you might experiment with raising it, right? Because users also want their transaction to happen in the next block. And that's the problem with Dutch auctions, is that a Dutch auction, you have to decay a price over time. And as time passes, like the longer, and so what you're experimenting with is like how long it takes to execute. But people don't want to wait. And actually, waiting also can work against the user if the price is falling, if the thing they're trying to sell, or rising with something that they're trying to buy. So time is, you don't want to like have a huge amount of time for your order to execute. But you also don't want to leave so much. So you need like so this essentially this order format on top of priority gas auctions to us and in our early experiments feels like a really, really good trade-off space where we can have orders that fill in the next block, have that be very, very fast. We can optimistically leave like a little bit of MEV on the table because we know that most of it will be rebated. And that ultimately I think will lead to like the right trade-off space of user properties where we think that most trades can essentially execute through this design on Unichain and create really, really desirable properties.
Yeah, I think it's hard to overstate just like how when you look at MEV today, just like in terms of that pie, like how big of a problem arbitrage still is, and like how much that is costing LPs and by extension it's costing DEXs in terms of liquidity and like users of those DEXs in terms of spread. And like overall it's making decentralized exchanges less competitive. And so it's really nice that we are seeing like some innovation in this area. I think the MEV taxes mechanism we have is one example, but then the app specific sequencing, there's like more. There's like some things also happening on Ethereum itself that are coming up, and so I think overall it's really nice that we're starting to tackle this, and it has effects also on the overall Rollup ecosystem, because like right now when you're an application that has MEV and it's not able to internalize that to its users because the chain doesn't allow it, then you are practically incentivized to like go and make your own chain if you can. And we are kind of stopping that leakage as well, right? And kind of stopping that fragmentation from happening. So actually you can be an app on a general purpose chain and still like you can have your composability, like, and you can have your MEV, like you can have your cake and eat it too. And I think that's a trade-off that wasn't possible before.
Yeah. And by the way, you say it's hard to overstate. Like when we last ran the numbers, the lower bound was like $1 billion a year from Uniswap users of our product. Like, was like the lower bound. It's probably even higher. So these are literally talking about billions of dollars worth of value that we're trying to return to users.
Yeah, and I want to, you're listening to Bell Curve, you've probably heard me talk about this before, but just a level set with folks who might not be quite as familiar with the LP problem specifically. So LPs get arbitraged against the price of Binance, right? So if you've ever heard people talk about this concept of lever loss versus rebalancing, that's basically what this is. It's the fact that price discovery happens off-chain on venues like Binance. We have a 12-second block time. And so generally the prices are stale on Ethereum. And so LPs basically pay arbitrageurs to arb back to whatever the current fair market price is, which is assumed to be Binance. And what you don't want is LPs paying tons and tons of money over a long period of time to those arbitrageurs, right? It's just, you should pay arbitrage some amount of money for that service that they're essentially providing to the protocol, but not too much.
And it's complicated, by the way, because a lot of people also frame LPing as volatility harvesting, and you actually also make money off the arbitrage. Like if you're taking a directional bet as an LP, let's say they're like, I think ETH USDC will be flat. You can just LP, and the arbitrage benefits you if you're like betting directionally. It kind of is like a different form. So anyway, it gets very complicated. By the way, I'll also leak some alpha. I think that there's a good hook design probably that uses priority as all you need from the LP's perspective, where the LP can set their fees dynamically based on the priority fee if you have strong priority ordering, potentially, and basically like raise its LP fee the higher the priority fee is, such that it returns arbitrage to LPs. I don't think I've ever talked about this one explicitly with anyone, but I do think it's potentially a good hook design for V4. And that's what it gets at. Like all of these pieces work together. Also, we'll say low block times, extremely good for LPs. Because you're getting a lot more, like LPs lose money on long-term price divergence, but they make money on chop along the way. All these like tiny little trades, like, if it goes up and then back down, they make money, right? If it goes up and it doesn't return, sometimes they lose money. That's the difference. And that gets at like, you have fees are path dependent and arbitrage, and where what people call impermanent loss, which is this term I made up and a lot of people talk about it now. But impermanent loss is, or price divergence loss is like a one-time thing based on the difference. And so the more small trades you have along the way, the more money you make, the more likely your fees are
Yeah.
to outweigh your permanent loss. And lowering the block times, and people will be able to arbitrage against centralized exchanges at this 250 millisecond block time. That just creates far more LP fees along the way, which should also be really good for liquidity providers.
Yeah, I mean, it's easy to think about when you consider you are LPing in a stablecoin pair. I mean, maybe you're trading, maybe you're like LPing Tether versus USDC, and like internally you just like book them, like you just mark them 1-to-1, right? But then you have a huge buy, and maybe it's pushing the pool out of balance. Obviously, like you don't care if you're being arbitraged back like 1-to-1. That's in your interest. Like you're purely volatility harvesting. And the lower the block time is, the more sequences there will be where two assets actually like mean revert, and you're making the fees on that. And so yeah, the more you can have that, the better for you.
And when we're going to get to like compounding returns there, it's also the lower the fees. So it's like a double benefit here, which is lower fees and lower block times equals far more arbitrage.
Now we're really going down rabbit holes here, but there's a cool thing about, by the way, the Rollup Centric roadmap, which because the trade-off, right, of reducing lever with shorter block times is you increase the risk of timing games. Like this is one of the things that like L1s with shorter block times have to mitigate against. And so it is kind of nice to isolate those two different challenges to different layers in the stack, which I find that to be cool. Hey everyone, this episode is brought to you by Fuel Labs, who's unveiling their new high-performance Ethereum L2 Fuel Ignition. Many of you know Fuel as the launcher of the first optimistic Stage 2 rollup on Ethereum with FuelVM, and now they're launching Ignition to address some of the creeping centralization concerns around some L2 architectures today. And if you like nerding out about the tech, there's a lot of reasons to get excited about Ignition, including how they solve state sustainability and performance execution. They have this UTXO asset-centric architecture that's very, very cool. But there's a lot of other reasons to love it. Super easy to use. You can either use a Fuelet wallet or your existing Ethereum or Solana-based wallet like Phantom or MetaMask or whatever it is. There are cool apps that you can experiment with. And again, like I said at the top of the program, they're launching phase 2 of their points program. So click the link at the bottom of the show notes, head over, start having fun on Fuel Ignition today, and just tell them that I sent you. All right, but before I want to ask, some more questions about like Unichain Vision to you, Hayden. And actually an analog that I think is sort of cool here as well is some of the, I had a talk actually with Sunny Agarwal from Osmosis a couple of years ago, actually. And he was the one who first pointed out to me this kind of paradox in between being a permissionless app chain, and it was that was the first step in my own journey of like blurring the lines in between general purpose and app chains. And I've kind of oscillated, it was everything general purpose, or is everything an app chain, or is it kind of this purpose-built thing in the middle? And that's what when I read the white paper and the announcement for Unichain, it feels to me a little bit like a purpose-built chain for DeFi and a liquidity layer, which is somewhere in between an app chain and I've called this like sector-specific block space. I don't have a catchy name for it, but it's somewhere in between app chain and general full purpose.
Probably not that.
Yeah, probably not that. Yeah, sorry, dude. Not my forte to come up with these taglines. No Dan Robinson there. But that's what it seems like to me. And could you just confirm or deny that, Hayden? And then I would love to get a sense of... And then I want to get a sense of where this fits in with the other parts of Uniswap. And specifically, maybe if we could concentrate on like V4 and hooks. I'm very curious,
Yeah, I think it's a really good question, and it's a funny one because there is like this kind of paradox here where to be like, I think what you say sounds about right. It's like it's kind of like purpose built for DeFi. I think that we'll see over time like how that evolves. It's possible that in 10 years from now we have actually a single chain per pool on Uniswap, right? We don't know how, or at least top pools might need their own chain because of the horizontal scalability of like ETHUSDC just needs so many transactions per second, right? So we don't really know what that ultimately looks like. But I think that in the world of today, you need like you could do a version of Unichain, right, where you have like all this custom logic such that the entire chain itself is the protocol, right? And like that's actually not too far from what DYDX is doing, for example. Right, they have like their chain, and their chain is also the order book for their perps thing. And that is like a thing you could do, and there might be efficiency benefits to like making the entire chain, at the technical level, the protocol as well. But when it comes to Unichain and what Uniswap means, right? Uniswap is not just a single smart contract protocol. It's like a world of things that interact with it and are built on top of it. And when you think about even like the vision of Uniswap v4, right? And the vision of Uniswap v4 is to say, well, there's probably actually not one best design for an AMM. There's actually probably many different designs, and we need to have like an open world of experimentation without everyone rebuilding an AMM from scratch, right? And building, something like Uniswap v3 or v4 is like really hard, right? We had to, it's like even just the process of making it safe and secure and whatever. And so with Uniswap v4, we're saying let's build this like flexible implementation where people can customize their pool designs, but still have certain like safety checks and properties that are guaranteed by the broader system. And but hooks are just general purpose smart contracts that Uniswap pools call into to express their logic. And so when it comes to like a Unichain, how do you have support for hooks while not letting people have permissionless smart contract deployment? And it's actually impossible, right? So you need to be a general purpose chain. You can't just be all hard coded. But there are things that are optimized for Uniswap that might not be, or for the Uniswap use case, but Uniswap even has like a broader, one thing is that like things that we do that are good for Uniswap are probably good for other things as well. And so we're not taking the opinion of like, there might be this other case we could make, which is like, this is only for Uniswap and things built on Uniswap. But what does that really mean? There's like a blurred line of like what should and shouldn't co-locate. And I think that like the right thing to do is kind of like let the market sort of determine where things co-locate. And build like, I think that like things that need to be ultra cheap in like in the long run, you're going to need to have separate chains for like games or whatever, right? Because a game isn't gonna want to like it might need its own sequencing logic. It might need its own thing to it might need to be like incredibly cheap and not want to co-locate with anything else. But really, like I'd say, it's what you said. It's a kind of a chain for a specific community and set of use cases. And I think that it will people will self-select into that, and we'll figure out what that means over the years.
So I've got a follow-up question here, and this is a little bit more directed to Hayden, but Hasu, I want to get your opinion as well, because this is something you've talked about when it comes to governance. So something that I've noticed, and you talked about this a little bit at the top of the episode already, Hayden, is that there's been historically, I feel like there's kind of been the infra people in crypto and the app people in crypto, and you see the line increasingly blurring there, and it always has blurred in ecosystems like Cosmos, where you have to do both a little bit. But starting to see this trend of actually people starting with building an application and then going down deeper into the infrastructure. Because this is one of the chicken and egg problems when it comes to apps versus infrastructure is, hey, the infrastructure should support the application and the use case, but we don't have any takeoff application and use cases. So what goes first? And I'm starting to see this trend of people that built an application, like the infra for me doesn't exist yet, and so they're building that. And that's what it seems like Uniswap is doing. And so, what you kind of end up with is something that looks a little bit more, word has always been dirty in crypto, but a little bit more vertically integrated or full stack, right? Where you control more of the entire user experience. And
I like full stack more than vertically integrated.
Yeah, me too. But do you agree with that? Is that roughly like a trend that you see playing out?
Yeah, actually, so I would say that interestingly with Uniswap, I'd say like, for example, Coinbase is starting fully at the application layer and moving down the stack. Other people are starting in the chain level and trying to move up the stack, maybe like even like Solana with their phone or something, which could be seen as doing that. I think of Uniswap as actually somehow like starting in the middle and moving in both directions, because we have this like we really did start with this like low level smart contract protocol thing, and then we built a web app on top of it, and then we actually built a wallet, which is one step even closer to the user, and then we started getting into chain development, and we have our EIP work in the Unichain. So we're actually kind of like pushing in both directions. But I'm a pretty big believer that like that there's a lot of value to building full stack, because you get a bigger set of the picture. And I found that like even like in the process of building a wallet, when we set out to build a wallet, for example, the decision partially came from the fact that we were like looked at some numbers, right? One of the numbers was like most users in Ethereum were making their first interaction on Uniswap, and even within our interface, and then we looked at our support tickets, and most support tickets were complaining about a problem that was in their wallet and outside of our control. And we were like, oh, okay, we can't solve we're like the on-ramp to crypto, and we can't solve our biggest problem, which is like, and so we wanted to create a experience where people can land on Uniswap, use it for the first time, and have that be like a high quality user experience without being pushed to another, app, or, and when you think about like the mental model for like how people use the internet today, people are not used to like the user experience literally used to be, I went to Uniswap for the first time. Okay, now I have to go to Coinbase, create a Coinbase account to buy crypto. Then I have to go to download MetaMask from the Chrome store and send crypto from Coinbase to MetaMask, and then connect my MetaMask to Uniswap. Like, that's not a real user experience. That's like a weird crypto thing. And the support for third-party wallets is actually valuable, right? I believe that we should separate custody from exchange, right? Like, I think we should like separate out, like, I think that the abstraction layers are important technologically, but the user experiences still need to be cohesive, and we need to offer paths for people that don't want this like extremely technical complex experience. And it's not that different, that example I gave on the wallet level is not that different from the chain level, which is that like people are making technical decisions about their chains that are like massively affecting the protocols built on top of them without really understanding those decisions. And so what I'm very excited about Uniswap Labs is like contributions to the L2 scaling world is that we are really starting to span this full stack, and we're able to think across it. And it happens all the time now in our day-to-day, where things that we know about our users inform protocol level decisions we make, and things we do at the protocol level. Our protocol expertise informs what is and isn't possible, and how we approach user-facing problems at the wallet level. And so the end result of all of this should be like much higher quality products built on top of blockchains, in my opinion. We're not saying that, like, sometimes when people frame these as like vertical integration, they think of it as like they're trying to build a monopoly. And if we were trying to build a monopoly, we would do things very, very differently, right? Because monopolies, have full control and discretion at each point in the stack, right? And so, like, for example, like Twitter was able to shut off its API. Reddit was able to shut off its API and rug all the applications building on top of the Twitter API, because they fully controlled it, right? The cool thing is that we build on top of the Uniswap protocol, right? And we don't have the ability to just like shut it off, right? And that's kind of the cool thing is that there's competition at each level of the stack, right? There's no monopoly because the technology is decentralized and permissionless. So building full stack isn't a way to like get power. It's a way to build better products and have a voice in the quality of the technology and the quality of the products and the abstraction layers that they're building on top of them. It doesn't really actually create more structural power the way that a vertical monopoly would in TradFi, because there you own the API, you own the endpoint, and without the company, the thing doesn't exist. Here, if Uniswap Labs were to shut down, the chain would continue to run, the protocol would continue to run, and everything would be just fine.
Yeah, I think sometimes it makes sense to unbundle, and sometimes it makes sense to bundle. And I mean, Flashbots has historically always like been an unbundling company, if you will, right? We've like unbundled block building from Ethereum validators, and we've unbundled the mempool in Ethereum. Like, in a sense, we're also unbundling sequencing and layer twos, because Unichain is outsourcing some of the sequencing or like the block building duties like now to a third party, right? So in a lot of sense, like, value can be created both ways, right? And but in other cases, then it makes sense to bundle, right? And I think especially with regards to the user experience, it makes a lot of sense, right? Like the LP problem, for example, that we were talking about, all of that money lost to arbitrage, that just simply wasn't a problem that you can easily solve by waiting for someone else. And like, Cose's theory of the firm, says, it's easier to coordinate, as part of the same company, right? Or part of the same ecosystem, let's say, right? But, for some problems, you just need, to have a kind of smaller setting to solve them. And then other parties, and this is like the beauty of crypto as well, right? With open source and everything. And then other parties can benefit from the innovation that was pioneered in this more integrated model. And so I think, it'll always be like a mix of both, and both have their merits.
Yeah, and I think it probably does just depend a lot on the product. Like, I think you and I have talked about this within the context of Lido and Steth, which I know you're least last time we caught up about this, would be very much in the camp of very thin layer and very credibly neutral. So maybe there's no good one size fits all here, just like many topics.
Yeah, it's really different depending on like what you're working on, for sure.
Yeah.
And if you're like talking about the trading experience of users, then I mean that includes so many things, right? From like downloading a wallet the first time, storing your private keys, account recovery, buying your first crypto, transacting on chain, so many different things that if you're just quote unquote an application, then maybe you control like 30% of that, right? And so really for the other 70%, you're at the mercy of other people in the stack.
Yeah, and yeah, I think that like oftentimes people, yeah, I'll take the like strong stance that I think we need more companies building more full stack in crypto. Like I think that a lot of crypto's problems today do come, and I agree with Hasu's broader take about like sometimes it makes more sense. Sometimes it's good to unbundle. Sometimes it's good to bundle. But I say that like today in crypto, I think there's not enough companies that are trying to span the stack, and a lot of people are offloading their problems onto other parts of the stack, or it's not even intentional. It's like sometimes it's actually they're trying to solve a problem and they create a worse one. You see this kind of all the time with like approach, even like, and I think that like, it comes up in all sorts of like EIPs or it comes up whatever. Like it's like, well, users want this, and it's like, well, do you truly know that? And it's like it came up around the account abstraction EIP where like I was kind of weighing into these debates. I'm pretty happy with the end result of it. I think that there was sort of like this conversation around like should you have revocable or irrevocable? Like should it be possible to have an irrevocable implementation of account abstraction? One of these account abstraction EIPs. I argued that we should. People on core developers to Ethereum, like people were like the stance from that is like, well, actually, users should always have the ability to revoke. But by making it that the case, you actually prevent people that implement these EIP, these account abstraction smart contracts from offering guarantees about them, right? Because if you can revoke, then anyone in another wallet can revoke, and then like let's say you want like a long-term account recovery mechanism, like Uniswap wallet. Let's say Uniswap wallet we're deploying like an implementation of an account abstraction EIP smart contract because they're all based on smart contracts now. That gives you key recovery. And then someone imports their key into a different wallet like MetaMask, and then MetaMask prompts them to revoke it because you can only have one at a time. The user thought when they created their account, when they signed in Uniswap wallet that it was like a permanent recovery method, but now it got just deleted by another wallet. And so like this was like a decision to say, well, users need more choice, but actually it prevents the applications from providing the guarantees to the users that they're looking to the applications to provide them. And so it's like this very complicated trade-off space where, and that's why, again, we're excited to like try to bring a perspective that we think is sometimes missing to the table.
It's very interesting, and maybe we can, when we close at our more 10,000 foot vantage point, we can talk about this a little bit, but it's a very interesting question about who should be the voice of the user when it comes to Ethereum. You could make a strong argument that it's actually the pure, the core devs, right, who don't have these, commercial interests, but they're also much further away from the user and might have less of an idea of what they actually want. So I don't know. Fascinating.
I think there's no right answer. I think it's like a conversation, and so I think part of it is just becoming part of that conversation, and it's not really about like we actually, I think that like there's a lot of value to the kind of like fully technical kind of focused version of it, or like trying to think entirely from first principles. Yeah. I think you just have to like marry that against like actual like we've gotten a lot more pragmatic over the past like year or two. Like we started like talking to our users more. We built out this customer experience team. We started talking to our users. We started like tracking data around what people want, right? Like, and it's like you learn a lot from just talking to your users. And like an example is that we used to have this kind of like very principled reason that we hated fiat transfer tokens, which is like they're really annoying. Like they make every protocol more complicated. There's a lot of weird implementations. They kind of like break like the clean functionality of like the transfer function transfers what you expect. And so we like just basically didn't support them in our products for a really long time. There was a point in time about like a year and a half ago where we're looking at like failure rates and numbers, and we realized that 50% of all transaction failures in our interface was fiat transfer tokens. And we're like, okay, our users clearly want these. How can we make them the best version of it? And so we like did a bunch of work to try to support as many as we could, and like ultimately give the users what they want. People want tokens that take fees on the transfer function for whatever reason. And so I think that like there's just like value just like pragmatically learning about what your users want and talking to them. And I think that like that is something that Ethereum could get better at. But again, like also there's a lot of value to these, like the way that like Ethereum is where it is. Like Ethereum is very successful for a reason, and there is a lot of really thoughtful technical decision making and discussion that happens. I think core devs can also get a lot of flack that is undeserved. Like I think that they, for the most part, like mean very well and build really high quality systems. And so it's just like a conversation, and then yeah.
Completely. And Hayden, I've got one more follow-up question for you on Uniswap, and then Hasu, I want to nerd out with you a little bit about MEV and Rollup Boost. But there was a little bit of I don't know, pushback maybe I'd say on Twitter, Hayden, about this. Everyone was, I think, very excited about Unichain, but there was one chorus of voices which was like, hey, was the DAO involved here, and what does governance look like in between labs versus the DAO, et cetera? So just any kind of response to that about the ownership of Unichain and how that decision-making responsibility is split.
Yeah, maybe one place to start with that is just like there are many different ways of achieving decentralization in the world. I have like a tier list of decentralization in my brain, and my tier list is like the best form of decentralization is like automation. Like if it just works, right? When you think about Uniswap V1 on Ethereum, like it just worked, and it didn't need like an active governance, right? And so like the best form of decentralization is just true automation. It just automatically does the thing it's supposed to do. I'd say that like the second best tier of decentralization is like economic basically like economic incentives. Like that Uniswap pools will always be arbitraged because there's an economic incentive for it to always be arbitraged, right? So this sort of like supply and demand marketplace that Uniswap creates is like decentralized in part because of the economic incentives around it and the kind of game theory of those incentives, right? And that's a form of decentralization. And then I say that like there's like, and then it's like things that can't be, and so like things that should be automated. Things that can't be automated, if they can be incentivized, like automatically incentivized, should be automatically incentivized. And then things that can't, that's where like governance are more like then how, and then the next tier of decentralization is like how do you have like a more distributed form of human governance, right? Like, and I think that like, the ways that you further decentralize human governance is you have broader distribution of power. But I think that like a lot of the point of these blockchain systems is to reduce the requirement on, human voting governance. And so I'd say that like, when it comes to Unichain, one thing I'll say is that like the intention of the DAO was never to be like a technical vision setter or technical decision maker. That's never really been its role. It's really been about like a limited form of governance over a particular set of things, right? It has like the governance treasury. It has voting over things like the different on-chain parameters that it has, like fee tiers and whatever, right? And so there's never really been a version of Uniswap that was like created out through like DAO delegates voting on the technical decisions, and I don't think that's like this is so I don't know. That's kind of. And I don't think that there's a lot of people that seem to want that or have that sort of vision, but I think there's a lot of people that also don't. One other thing that I think is worth flagging on here that I think is pretty interesting is the Unichain validation network.
I was going to say I forgot to bring that up. Yeah, but that's
And I think that like one thing that's interesting is Uniswap has always been this like kind of like governance token, for the community to participate in, and in Unichain for the first time, there's going to be this more direct form of participation through validating the network and running nodes. And I think that it's almost like a transition from pure governance to like actually it also does these other things like it has this direct utility. It's almost like a network token within Unichain, and I think that that's pretty cool as well. And kind of like a cool opportunity. And I think a lot of people, same way that some people seem frustrated on Twitter, I think a lot of people are also excited about what all of this means. So, yeah.
Awesome. I've got follow-up questions for you on that actually when we end. But now, Hasu, I want to turn it over to you. And you and I did this whole season on MEV, and we generally approach things through the lens of the MEV transaction supply chain on ETH L1. And like I said, I'll link it in the show notes here. But about a year ago, you put together this great talk on what PBS should look like on L2s, and now the L2 space is much more developed than I would guess at that time. And you guys have been building a product to serve this, like Rollup Boost in the background this whole time. And so can you just give the audience a sense of, I think most people, their framework for this is thinking about how MEV works on ETH L1, but talk to what are the big differences in between solving or working with MEV on L2s versus L1? Then we can get into some of the details around Rollup Boost.
Sure, yeah. So on Ethereum layer 1, I would say we have a very developed MEV supply chain. So the MEV supply chain has a lot of layers, and you have competition on many layers of the stack. I would say the transacting experience on Ethereum has been getting a lot better over the last 4 to 5 years since we started talking about MEV. Like, applications have become much more MEV aware on Ethereum layer 1, right? Like, you see much more like MEV aware designs. Like, there's better liquidations, like less arbitrage, fewer sandwiches, fewer like weird forms of MEV. You have, I would say, like an unbundling of kind of the public mempool. Like, you no longer see a lot of transactions going through the public mempool at all, both because like apps, users, and wallets understand the information contained in their transactions has financial value, and so they started sending it through these private channels. You see much better transaction pricing mechanisms. Like, you see MEV that's like being returned to users. And I would say, like, in spite of the block builder market, when you look there now, I think this has always been like the Achilles heel, like that you outsource a lot of tasks, like of these important tasks to like a market of external parties. But this role has a lot of network effect. And so you'll end up, with like a small number of block builders. And so that's what you're seeing right now. You have 2 block builders building about 90% of blocks. That said, these block builders are very, very competitive at like a per transaction level, even at like a per block level. And so what you're seeing is these block builders are not making any like outsized profits. That said, it still is a potential choke point for the network. And so our goal has always been and is to decentralize the block building role itself. And I think that's roughly where we are. Like in Ethereum, like I can talk about some of the exciting kind of advancements that we have made and that others have made like towards this goal. But very roughly in Ethereum layer 2, I think you are at a much more kind of early stage when it comes to MEV. And so you don't have really much of this infrastructure built out. Rollups are very still like bundled or vertically integrated in the sense that, like, in Ethereum, you have this separation. You have you have the testers, you have proposers, and you have block builders. They are all kind of different roles run by different parties and keep each other in check. In Ethereum layer 2, you have, this was actually the topic of my post, for people to like start thinking about the sequencer actually as this like dual role. It's a proposer, but it's also a block builder. And there is like no rollups as of today that have started to unbundle this. There's no rollup that is outsourcing block building. So Unichain will be the first to do this. And the benefit is that you can get a lot of, kind of the same effects, the same user guarantees on the layer 2 that we now have on the layer 1. And so, for example, what Unichain is getting through their block builder is they can run an explicit MEV auction every 250 milliseconds. They can commit to a specific block building algorithm, which then allows stuff like MEV taxes to be developed on top. But you can also have revert protection for transactions, something actually we hadn't mentioned so far in this episode, but which is also a very big deal. Because when transactions fail, it's pretty much among the worst experience for users that you can have. And it's actually, in spite of failed transactions, also paying transaction fees, actually turns out that your revenue will be higher when you filter out reverting transactions.
Yeah, I had a question on the list of benefits there because the revert protection thing is actually one thing on the UX side that I think Ethereum has a bit of a leg up on Solana. There's no partial reverts on something like Solana, which for a user, it ends up you end up paying for a lot of failed transactions, but the transaction fees are pretty low. But it's a UX thing, so you're like click, 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 which is a little frustrating. But oh, well, here I gotta before we get there, I want to land the plane on like the other big part of this that we haven't talked about, which is the TEEs. So one of the cool thing, and I'll link this in because Hasta, we did a bunch of episodes together that season, but you had a great explanation of the evolution of the sort of Flashbots product suite where you were in MEV in the beginning of Ethereum when there were just a couple of big miners. It was actually sort of much easier in some senses to design a solution because you could rely on the trust of that small number of actors. It was a huge challenge when it became how do we serve all of these tens of thousands of decentralized validators, and now it feels like we're actually moving back to a space where there are but like more a smaller number of actors, right? So you kind of open up the design space in terms of some of these solutions that you have. And then you also introduced TEEs. So if you want to maybe comment on that first part and then describe what TEEs are, that would be excellent.
Yeah, so I mean, if you Vitalik had this really interesting post already now a couple of years ago. I think it was on the definition of decentralization, and he draws out this dichotomy between logical centralization and architectural centralization. And Ethereum itself is a system that is architecturally decentralized, but is logically centralized. And this, allows it, gives it all of its unique benefits. For example, the fact that it has a single virtual machine, that it has a single piece of state that is maintained across all of these different nodes. That's what it's meant by. They all do the same thing, right? Every block they process, they use the same state transition functions to apply new transactions to the state to arrive at the same new state. That's the whole purpose of a blockchain. And so it turns out that when you have when you have a system that is logically centralized, you can get a lot of benefits without the drawbacks of architectural centralization as well. And block building is one such example. Block building is an example where when you have one block builder, then you can actually have a lot of benefits from this. This block builder can much more effectively price transactions. They know of all of the transactions that exist, and they can, for example, charge the users exactly the lowest price they need to get into the block, and don't charge them anything more. The block builder can also enforce, for example, additional rules imposed by applications. They can filter for hacks and anything that breaks specific invariants that applications impose. Or you can have the block builder perform computation maybe just in time for the block to be built, for users to make their transactions really programmable. There's a lot of cool things that you can do when you have a logically centralized block builder. But you need to design it in a way that is architecturally decentralized. And that doesn't just mean it's run by a party you trust or that's run in a TE. It also includes things like geographical decentralization, because that's what everything eventually collapses to. The lowest layer kind of accountability in the world is where is your hardware located? Who can come, knock down your door and hold you accountable to local laws and regulations. And so it's also kind of a long wind up, but the beautiful thing behind this, what we call TEs, trusted execution environments, is that it's a way to kind of separate kind of the ability to run, or what you gain is the ability to have trust, software that you can trust run by untrusted parties. And so this is a very big deal, because you no longer have to trust the person running the machine. And the way we do this is, we didn't design TEs. TEs are designed by Intel, AMD, many others. So is through these secure areas in a processing unit that are designed to protect the integrity of code and data. And so you can, imagine a TE is a special kind of server that also commits to the code that's running on the server, makes it verifiable by anyone, and it keeps the computation that's happening in the server private. So, I mean, Hayden, I think you in like a previous podcast, you used this example of, like a blockchain is this kind of magic server with magical properties. Like I sometimes say, like a blockchain is a server in a straitjacket, and so because it can't do any harm, right? It can't do anything that you don't want it to do, and like a TE is kind of a very similar thing, but it also has blindfolds on, so it can't even see what it's doing. Like it knows what it's doing, but it can't peek, and it can't do anything with this data. So it's in a lot of ways it's a complement, I think, to the public blockchains that we have today, and also to like cryptography techniques like zero knowledge, like very specifically with the idea of separating the trust guarantees from the hardware provider and from the data that they operate on.
Yeah, by the way, I'd love to quickly hop in. I know we were probably running low on time, but I'd love to quickly hop in on TEs for a second, just because I'm sniped. I think that TEs get like a lot of undue. Like I've learned TE Twitter is a whole contentious place, but I think that the way I think about it is that it gets right back to that, like those like abstraction layers and full stack thinking, where a lot of people still like. Sometimes people view TEs as like a lazy solution to like solving a thing that decentralized consensus should solve, or that's like the criticism it gets. But I think what people don't understand is that like there's a lot of like open like TEs aren't purely replacing, like they're not replacing decentralized consensus or nodes, right? Like in Unichain, you still have like the validation network. You also still have the L1 consensus, right? But what they are replacing is things that today often happen in a more centralized way, right? Like blockchains are not just the chain; they're like everything built on top of it and around it. And today, a lot of that happens in servers. And by the way, a lot of Ethereum nodes are also run in things like Amazon, AWS, and right. And so TEs represent like a way. To me, they represent a way of like adding on better trust and better decentralization and better security properties or privacy properties, all of these things, to things that currently lack them, not to things that currently have them, right? Ethereum L1 isn't going to be like that much, if we're not going to run all of Ethereum L1 inside of TE, right? We're going to continue to have this decentralized consensus system. But for what we're doing at the builder level, right? This is like replacing things that are happening in various like, block builders. I'd say that like, the properties you can get are really desirable. Anyway, I'll have to say like decentralization is like a spectrum, and it happens at many parts of the stack. And TEs represent like the ability to further decentralize things that are on the fringes between what is decentralized and centralized today. And I'll also just add that like ever since I started adding them to my mental models and design space, I realized how many cool things you can do with them. And that's why you get things like the flashbots, like teleport thing, which is like you can actually, because they're really just like you could start to like connect blocks, like you can start adding decentralization properties to things that aren't even close to having them today.
Yeah.
And you could do a better version of that, right? And a very good example of this, by the way, is like the deploy process for like an application today. Like those, you almost like if you have something in the Chrome Web Store, you almost inherently have to have like a Chrome admin account to deploy your app, or you have something in the Apple Store, right? But if you start creating these credentials inside TEs, you could have a guarantee that the code is open source before it's published to the App Store. And so things like this are like ways of enhancing the decentralization of things that sit around decentralized things. Anyway, so I like TEs. They're pretty cool.
Yeah, so I think kind of the nice thing that we're getting here from TEs is to remove a lot of trust from the block building process. And so when you specifically, whether you look into our layer 1 TE block builder, so we have a block builder that's competitive with other block builders on Ethereum layer 1 that's also running in a TE, and then on Unichain, the block builder will also be running in a TE. So what you get is very specifically those block builders, they can attest to the code that they're running. So you know how your transaction will be processed. It will be processed exactly to the rules that the block builder says it will. And it's keeping no searcher, nobody can peek not even the operator of the hardware can peek at your transaction.
Yeah.
So it's it will at some point stay fully encrypted within the TEE, and then only the final block will ever make it out of the machine. And so there, in auctions in general, like there's the famous problem, of residual bids. For example, like when a searcher is bidding for an opportunity, but they didn't get the item, right? So this is also like an extremely valuable piece of information that the block builders have actually from the searchers who submit bundles to them. And so we are like making the whole, just by keeping all of this data in a TE and like making sure that it can never leave, you're just making the whole stack so much more resilient.
Okay, guys, this is great, and I've got a million more questions here, but yeah, I'm going to link, by the way, both the Unichain white paper and the Rollup Boost white paper as well. So if you have more questions on some of the technical specificities here, I'd highly recommend that you read it and maybe ping Hayden and Hasu, and maybe they'll get back down. Not sure, not to volunteer your guys' time. But I want to end where we started and zoom out and ask you guys some more questions about just this like moment in time that we're in around Ethereum and how some of the stuff that we've talked about in our episode today slots into that. And one question that I have for you guys, we started by reaffirming both of your faith in the Rollup centric roadmap. Let me poke at that just for a second here. And one almost philosophical level question that I find interesting to ask is what should be the provenance of what should be within the realm of the free market to decide as a solution versus whatever our solution is for like government here, like public versus private market solutions. And, there's a really influential piece of writing that Barnaby did from the Ethereum Foundation called Seeing Like a Protocol, which was very influential to me in terms of how I thought about this. And, basically I've got this dividing line in my head now, like this is what the L1 wants to directly concern itself with solving, and this is what it doesn't want to concern itself with solving. And I guess I'd just be curious to get your guys' perspective on, because on the one hand, I like the idea of pushing more complexity to the free market. I think that has historically shown that that's a better solution. On the other hand, the criticism of that would be, well, now you have all these different people with different types of incentives, so it's harder to move. Or maybe people are acting in the best commercial interest of their business as opposed to the broader Ethereum L1 landscape. So how would you guys respond to some of that pushback? What are some of the potential cons, I suppose?
Yeah, potential cons of Rollup centric roadmap. Happy to let me know if I'm get off track or if I'm not answering because it's a complex question. But what I'll say is that I think that one issue Ethereum has is people think pretty negative sometimes, and I think that fundamentally I believe blockchains are positive some things where we can create net new wealth and value and access in the world. And I think that a lot of the criticism I see of the Rollup centric roadmap comes from zero sum thinking, where people think well, if DeFi is not on L1, then all that value goes to some other token, and ETH should get all that value. And I think that's a really zero sum way to think of it. I think that the scale of what blockchains can be and what they can do, and what Ethereum can be and what it can do, is so much bigger than the execution of DeFi transactions. Right? It's and there's just no what would be a huge failure of Ethereum in my mind is if it just pursued maximally set maximum node size at all costs to have everything try to happen on the L1. Because when you think about where we started and horizontal scaling does massively outpace vertical scaling. We need to have many chains to scale blockchains, and Ethereum needs to think about what is its role within that world, right? And I think that it's very clear today what it's proposing it be, which is maybe it's not. There are some slightly and then I think then it gets at business models and economic streams, which we can talk about in a sec. But Ethereum today is basically providing data availability to rollups, and I think that that's what these data shards are, right? These blobs are, right? And I think that if it instead shifted its focus to scaling up DeFi transactions on L1, I think that that would come at the expense of all the chains that are building rollups on top of it. I think from my perspective, I think Ethereum should essentially try to be money. I actually am I used to criticize ETH as money. I'm actually kind of on board with it. I like the idea of having an alternative store of value that is kind of built for this economy. But I don't think it should be I think the core focus of Ethereum should be should have like a vision and mission for what it's trying to do, and that should be like this like highly decentralized but also highly scalable blockchain ecosystem. And then when a lot of people like criticize it, they're like basically afraid that money will not all go to ETH. And I think that that's like a really bad mindset to have, right? Because I think that like, having other things that are valuable built on top of Ethereum will drive value to Ethereum, right? And the thing that will actually, the failure mode is holding it back. The failure mode is like preventing progress. People kind of like are afraid of change very often, versus like Ethereum's. Yeah, we loved when Ethereum was sub 1 cent transactions and everything ran on L1, and we didn't have to worry about liquidity fragmentation because there was only one chain. But that's not the future. That's not what it will look like in 5 years, right? And it's kind of like people kind of like want to go back to that. And I think that what we have to do is actually figure out how do we make it just work in the future in a more scalable model. And that's what rollups are trying to do. And then how, what gives ETH value? Well, ideally it will be providing a huge amount of data in a very, very decentralized way. One thing that I think that is like an underpinning of some of this, I do think that Ethereum should have an enshrined proving system in it. I'd say that rollups are doing multiple things, right? They're doing proving systems, but they're also doing, sequencing. There's a bunch of components to it. I do think that in the long run, like L1 social consensus should and will protect a decentralized, like a proving system for L2s. When you think about like today, if a rollup failed, would Ethereum fork? Probably not. But if you had an enshrined proving system, an enshrined Stark or Snark system or whatever it was, I think that then you could have you could build things on top of that you knew would fork or that you knew Ethereum's social consensus would ultimately protect. So I do think that Ethereum should, in some ways, Ethereum should play a more active role, and in some ways it should, but it should also be doing it with a positive sum mindset that seeks to spread and have more and more chains, not less. Because I think eventually we're going to have literally, millions and millions of chains, and the mindset of there should only be one chain isn't really a very good one.
Also, what do you think?
Yeah, I don't know that I have that much to add. I think I still remember when EIP 1559 happened a few years ago. I was one of the bigger supporters. I thought it's upgrading the transaction mechanism, the pricing mechanism a lot. It's a very nice upgrade for that. But in hindsight, I think the idea of having the burn, it's it was kind of a 2-in-1 package. You couldn't really have it without the burn. But the fact that we got it, I think, in a lot of ways is backfiring. Very bearish. It was very bearish for Ethereum, because now all of a sudden people are looking at this number and oh, is Ethereum making money? Oh, is it losing money? Who gives a shit? If Ethereum was a company in this it's not, but at this stage of its life, it should be definitely not concerned with how much money it's making, and
especially buybacks.
yeah, exactly. That's a better framing. It should definitely not people shouldn't look at, oh, how much money is it making, because you go on Twitter now, you see oh yeah, we should actually raise blob prices, so because right now the demand to consume blobs is under the supply that we have, only barely, but it is. And so the blobs are nearly free, so oh yeah, we should lower the supply just to make people pay more. And I think some of this stuff is very, very self-destructive, right?
Yeah.
Ethereum should be very focused on this long-term goal that we talked about in the beginning. I'd say it again, it needs to be very scalable with a good UX, and it needs to be global and decentralized. And every bit of progress that we make towards this is way more important than any tens or even $100 million of buyback that we can make at this stage for ETH holders. So I think this is what people should be focused on, and this is also how they should evaluate the Ethereum roadmap. To me, this doesn't mean, for example, that we shouldn't improve the Ethereum layer 1. Ethereum layer 1 should improve as much as kind of technical progress allows, because rollups also benefit from the Ethereum layer 1 getting better, right? Blue chip DeFi, the bluest of blue chip DeFi will probably there will always, some of it will stay on Ethereum layer 1. A lot of the liquidity will stay on Ethereum layer 1, because that's the place where you bridge out from into these different ecosystems, right? And ultimately where I think a lot of things will get settled at the end of the day. And so
sorry, a second.
Yeah, no, I was done anyway. So I mean, like, and that's so yeah. I mean, Ethereum should push the Ethereum layer 1. It's like not, but it should also support the rollups, and I think both of those are very important.
Well, it's just hilarious to me that like when you see like we literally call the roadmap for Ethereum the Rollup centric roadmap, and then the idea that like roadmaps are very like I'm like still like very bullish and optimistic about Ethereum, and I think that like high quality new rollups are like should be seen as a huge win and progress towards Ethereum's vision and towards what Ethereum's trying to achieve. And I think that like that kind of gets at like the zero sum mindset. Like people, I agree with Hasu completely. Like it's a complete failure mode for everyone to just focus on short-term profitability for Ethereum. I think that like that would be mega bearish relative to like the long-term opportunity of Ethereum, which is insanely huge and so much more expensive, right? Becoming like this like settlement layer for the world is like so much cooler and more interesting. And kind of even like so the EIP 1559 debate is such an interesting one. I kind of also agree it was like potentially a mistake. I don't think it was like such a bad mistake necessarily that it's like a big deal that we have it. Like I think it like works for in certain ways. But I think Ethereum, like if I were to like give advice to the Ethereum roadmap, it's like do things that make L2s better, don't do things that make L2s worse. And the more you put like constraints on like how transactions are constructed, for example, like I don't think we even realize like 1559 came out before we had all this intense architecture. It also came out before we had like high quality like private RPCs and like a more sophisticated MEV market. And so like a lot of like the UX issues around block pricing probably wouldn't exist today. It would have been just solved naturally in the same way that like we still had to. Like people still had to build these like MEV aware nodes that like, and like we might have fixed that temporary like like whatever, like the main wallets weren't very good at pricing the gas and it was a little complicated because it was a little more volatile. But we could have probably fixed that problem without introducing a constraint that the transaction.origin of every transaction needs to have an ETH balance, which actually makes it way harder to onboard users to Ethereum. And like a lot of issues that we deal with like at a UI level actually are like a direct result of that decision. And we probably would have moved away from, like we would have probably moved, and it also has like influenced like the account abstraction conversation as well, which is now like building around this constraint of you needing ETH in your wallet.
Yeah, you can no longer easily like sponsor any transactions for somebody else, right? It's
and to do an approve, you have to to do it like sponsor an approve, you have to transfer ETH into their wallet, but then you have to know that they're going to then do the approve because not just keep the ETH. It's like it's actually not, again, there's ways around it, but we're like working around these new constraints. So my hope for the Ethereum roadmap is that it really focuses on its scaling roadmap, the L2 centric scaling roadmap, and tries to like not introduce complexities that in an attempt to capture MEV, in an attempt to capture in an attempt to like monetize ETH in a more direct way. And by the way, aside even if you pay a validator on the side to be a validator, you still have to stake ETH. So like that value was already going to ETH. It's just like gone from implicit to explicit. My hope is that we kind of really focus on what will make Ethereum better for L2s. And that's why when it comes to the blob decision, it's so freaking obvious, cheaper blob data is better for L2s. It's better for scaling Ethereum. It's not even close. We don't want to artificially jack up the price of blobs. We actually should be probably focusing on, it's almost hitting the target. How can we add even more blob data? Not, it's almost hitting the target. Let's lower let's artificially constrain it so that it's making us more money. It's just,
You guys are unpacking like my absolute favorite subject to talk about right at the end of an hour and a half long podcast. So unfortunately, we don't have time to unpack all of this. Maybe we can do a part 2 at some point. But the fee discussion is actually, I think, one of the most interesting ones. And the other thing that TradFi has up on crypto that we just haven't had time to unpack some of the nuance of these ecosystems. And I think in a lot of ways, L1s are pretty new things in general. You can there's nothing new under the sun, and there's been a lot of first principles things that sort of look like this in the past, but it's okay to just update your mental model. L1s are not companies, and it's okay to think about them in slightly different ways. But we just haven't had the time to unpack and have all these debates and discussion. But all right, guys, unfortunately, I think that's all the time that we have. I want to be respectful. We've already gone way over here. So look, this was a great discussion from my perspective. I had a whole list of questions I didn't get to with either of you. But if folks want to find out more about Rollup Boost or Unichain and get involved in some way, shape, or form, maybe develop a hook or I don't know, Hasu, they're an L2. If you're an L2 builder and you're like, hey, I want to, solve some MEV stuff. Like, what's the best way to follow both you guys or learn more or get in touch?
Yeah, let's see. To learn about Unichain, you've got the new unichain.org. You can always follow Uniswap on Twitter to see everything we're doing. Follow me on Twitter. I think that, something that we were really pioneer, like all of these code bases are now open source or Uniswap before, for example, we built a lot of it public, and like people already have been involved in the conversation for a very long time, but definitely hook builders should reach out to us or should reach out to the Uniswap Foundation if they need, funding and support. To get involved in Unichain. I think that like Unichain, we're gonna be, I think that like one cool thing that I'm very excited about with Unichain is actually that one, it's entirely MIT code base, which is pretty sweet. And the validation network is MIT, the builder is MIT. We're really trying to like build, like we're not trying to like keep this to ourselves. We're trying to like build something. We're trying to like prove out Ethereum, a lot of Ethereum's roadmap. We're trying to bring people along with us, right? If we make advancements, we want other people to benefit from them. So I'd say that definitely we're hoping that people see what we're doing and build on top of it and improve it and contribute to it. So yeah, and that's one of the reasons, by the way, I'm excited to be collaborating with Flashbots, with Optimism on this project. A lot of people, it's sort of this like world of like compete, like everyone is trying to build the same thing. It's a thing that a lot of people say in crypto is everything is trying to be, every company in the crypto is in some ways trying to build the same things, right? Because there's these sort of inevitable outcomes to how some of this will be architected. I'd say that like, one reason I'm excited for it to be a collaboration is that like there's a lot of like, I guess it's meant to just be an outro. Now I'm monologuing, but it's just like, like having a bunch of high quality teams all contribute to the same thing is really useful for helping set the standards for those things. And like, we don't just need good blockchain implementations. We also need a convergence towards the standards for how they interact with each other. And so part of like doing this, not just like Uniswap Labs by itself on a side mission, but Uniswap Labs with a bunch of other partners in the industry and bringing other people along and making it MIT. It's all about like trying to bring the industry along with us and open up a conversation. And so, yeah, we want a lot of people involved in this in the long run.
Awesome. Yeah, so I can second that. I think like we are designing Rollup Boost to be this innovation platform for rollups, and so we want to develop a lot of different modules. We want other people to develop a lot of different modules, so we can supercharge innovation on layer 2. And we have like so many cool things that we didn't even get to touch on, like beyond the stuff that's shipping with Unichain. We have TE validity proofs, so you can get these multi-prover systems, then upgrade Rollup bridges to type 2. You can have TE co-processing. Hayden, you were touching on it with teleport, and like I don't know if anybody was watching this TE bot that the other week like a bot that was owning its own hardware in like living in a TE and was tweeting all day. It was like you're seeing some very cool stuff. I mean, like a lot of this looks like a toy right now, but a lot of great technology started out looking like a toy, and I think every one of these demos is proving something very new and very fundamental. And I think if you're on TE Twitter, if you're kind of following these things, then it's a very, very exciting time, I think, to be in crypto right now. And I think especially like crypto becoming more open to hardware innovation as well is like unlocking a lot of things that seemed very far away and like that seemed very much impossible, I think, for the longest time. Like interoperability between like Web 2 and Web 3 services, for example, is like a major thing also that the TEs can unlock. And so, I mean, personally, I'm very, very excited to be in crypto right now. I think, a lot of cool things will also happen around DEF CON. So if you're attending that or watching any of the streams, like look out for our events there. And yeah, if you're a Rollup operator, if you're like a developer, if you're interested in contributing to this or running Rollup Boost, also get in touch, because yeah, this is a public good that's built by and for the community.
Excellent. Guys, you've both been super generous with your time. This was a ton of fun for me. I'm sure listeners will find it useful as well. And Yeah, we'll have to do it again sometime soon.